Hey there traders, this is Steve Miley, market chartist for FX Explained, and here we're going to do our regular weekly MacroWatch update, looking at the geopolitical, fundamental and macroeconomic events that have shaped markets here as we've got into the beginning of February, and then looking out in the week commencing the 10th of February. We're in here, we're talking about this erratic theme at the moment for global financial markets. Risk on has tried to resurface in the face of the coronavirus fears, but markets wobbling at the very end of last week. So as we highlighted in last week's Macro Watch, the global spread of the virus had seen markets more in a risk-off mode for latter January and into early February, with global stock averages plunging lower while safe havens like the US Treasury bonds and global bond markets rallied higher. However, that bias shifted to more of a risk-on theme through last week into the start of February, with global stock indices recovering. US averages here, the S&P 500 hitting a new all-time high, whilst in the Forex space we saw the Japanese yen selling off, US dollar, Japanese yen going higher, whilst commodity currencies, the Australian dollar and the New Zealand dollar, tried to put in some rebounds and tried to discover some bases. What was driving this? Well, we saw positive data from the global market, manufacturing and service, purchasing managers indices, PMI data positive on the global front, and also the ISM data, the Institute of Supply Management data from the US, also positive in here. Alongside that, we also got tariff cuts from China on US goods, and this alongside the optimism that was coming through that there was a virus cure, and also waning fears that the coronavirus was spreading that seemed to be able to be contained. All of this positivity helped the move to more of a risk-on theme last week. However, at the very end of last week, then we got the US employment report, which is actually a positive report. 225,000, the non-farm payroll element of that report, much higher than the expectation. And that could then possibly leave the Fed on hold for longer, but probably now reducing the chances of a rate cut in this quarter, in Q1 of 2020. Possibly markets, stock indices were probably looking for another rate cut. And with the question mark is another rate cut priced into stock indices in here at the moment? Because stocks are reacted negatively, particularly US equity markets punched lower on Friday, and the Australian and New Zealand dollars in here also significantly lower. Also, fears growing as again at the end of last week that the virus wasn't being contained, more countries being infected, and growing concerns again at the end of last week that the around the whole coronavirus. So this saw the Australian dollar, for example, plunge to its lowest level since 2009, taking the low out that we put in recently last year. So markets certainly shifting back towards risk-off mode as we ended last week. Aussie was lower, dollar yen was lower, S&P 500 lower. The other thing to mention in here, the US impeachment trial concluded with President Trump acquitted, as markets had expected, but negligible impact. What are we looking at for the week ahead in here? Well, for the week ahead, coronavirus clearly high on the agenda. Anything that we get through, any further news from the World Health Organization is going to be critical going into this week. On Tuesday, we get central bank activity. We have the RBNZ, Reserve Bank of New Zealand, in play on Wednesday of this week. And sandwiching that on Wednesday, we have on Tuesday and Wednesday, Jerome Powell is his semi-annual monetary policy report from the Federal Reserve given by Jerome Powell to Congress. So we have that on Tuesday and Wednesday, and in between the Reserve Bank of New Zealand interest rate decision and also their statement and press conference. On the data front, nothing really of note on Monday. Tuesday sees UK GDP plus industrial and manufacturing production from the UK. We've already mentioned Fed Chairman Powell testifying to Congress on both Tuesday and Wednesday, and the RBNZ also on Wednesday. German and US CPI come through on Thursday, whilst at the end of the week we get both German and the EU GDP. US retail sales, and the week ends with the Michigan Consumer Sentiment Index. I'm going to wish you all a great trading week. Be careful out there. It's likely to be volatile with the further developments on the coronavirus. I'm going to ask you please to follow us on our YouTube channel, and if you're interested in receiving the Market Chartist reports, please do go to marketchartist.com. I'm going to catch you soon. Until then, have a great trading week. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.